Welcome to the Explainer. All right, let's get right into it. We're breaking down Morgan Stanley's latest earnings report, and wow, the numbers tell a really powerful story about a major rebound.
Okay, so let's just dive right in. The first number that just jumps off the page is this one. $18.2 billion. That's their revenue for the third quarter. And look, this isn't just a good number. It's a record breaker. It's a huge signal that the financial engines are absolutely firing on all cylinders.
But, revenue is only part of the picture, right? The bottom line, the actual profit, well, that's where things get really impressive. Their net income just soared, up 45% from this time last year. We're talking $4.6 billion. I mean, to put that in perspective, that is a massive, massive leap in pure profitability.
And the CEO, Ted Pick, he really hit the nail on the head. He said this wasn't just a fluke, It wasn't one division just carrying the whole company. Nope, this was a success across the board, a really integrated performance from all their businesses around the world.
Okay, so let's break that down a bit more. To really get a sense of just how big this quarter was, we've got to put these numbers into perspective.
And yeah, here it is, plain and simple. You can see the growth right here. Revenues, up 18%. Net income, like we said, a whopping 45%. And for the shareholders out there, earnings per share jumped a staggering 49% compared to last year. I mean, literally every important number is pointing straight up.
So the big question is, where did all this growth actually come from? Let's peel back the layers a bit, starting with what you might call the engine room of the bank, the institutional side.
So what is that exactly? Well, this is the classic high-stakes world of investment banking we're talking about. Big mergers and acquisitions, companies going public with huge IPOs, the whole 9 yards. This part of the business is a fantastic barometer for how confident the corporate world is feeling at any given moment.
And boy, is that barometer showing clear skies. Look at this. Investment banking revenue surged 44% after things were a little quiet for a while. This tells us that companies are definitely back in the game. They're making deals, they're raising money again.
And it wasn't just the deal-making side either. The strength was across the board. Just look at that huge 35% jump in equity trading revenues. That means clients were super active. Morgan Stanley was right there to capitalize on all that movement.
So why the big rebound? Well, it was kind of the perfect storm. You had more M&A deals actually getting done. You had more companies deciding, hey, now's the time to go public. Plus, the whole financing environment just got a lot friendlier for loans. And on top of all that, their trading clients were more active than ever. Just a ton of activity.
Okay, so that's the big corporate side. Now let's switch gears and talk about the other powerhouse for the firm, wealth management. This is the part of the bank that's all about managing money for individuals and families, and it has become an unbelievably consistent engine for them. So yeah, this is their huge wealth advisory business. We're not talking about those one-off blockbuster deals here. This is the long-term, steady work of helping people manage their financial futures. And man, is it a consistent performer.
And just get a load of this number, $81 billion. That's how much in new money this division brought in just 3 months. That's just a massive vote of confidence from clients. It shows that when markets get complicated, people are really looking for that professional advice.
And this is what makes their model so incredibly powerful. Look at this chart. Almost 60% of their revenue here comes from stable, recurring fees they get from managing all those assets. It's not all about the crazy ups and downs of trading commissions, and that's what makes it such a reliable, steady stream of income for the bank.
All right, that brings us to the third and final pillar of the firm we're going to look at, investment management. This is the part that handles the really big, large-scale investment funds.
So you can think of this as the factory, right? This is the arm of the company that actually creates and manages the investment products themselves, things like mutual funds, private equity, you name it. Then the folks in wealth management might recommend these products to their clients. It's all connected.
And the scale we're talking about here is just immense. This division is now overseeing $1.8 trillion in assets. That's up 13% from last year, which tells you it's not just individuals. The big institutional investors are also giving Morgan Stanley more and more of their capital to manage.
Okay, so with all this money coming in, you have to ask, where's it all going? This table here gives us the raw data, straight from their report, showing exactly where clients put their money this quarter.
And this is where it gets really interesting, because the data tells a fascinating story. Look at this. Investors actually pulled money out of stocks, about $6 billion. So where did it go? Well, they poured over $8 billion into fixed income, bonds, and a massive $14 billion into alternatives, like private equity and real estate. It's clear they're looking for returns in different places right now.
Okay, so we've seen all these huge numbers. But what does it all mean? What does a monster quarter for one of the world's biggest banks tell us about the bigger picture, about the economy as a whole? All right, so let's tie this all together. What are the key takeaways? Well, first, you've got this incredible broad-based strength. All three big divisions were firing on all cylinders. That's a really healthy sign. Second, that 44% surge in investment banking, that's probably the clearest signal yet that corporate confidence is coming back. And finally, all that cash pouring into their other divisions shows that investors aren't just sitting on the sidelines anymore. They're actively putting money to work, looking for stability and growth.
So this is all a really strong indicator for sure. But it does leave us with one big question as we look ahead. Is this the sign? Is this the moment we can say the skies are finally clearing for the global economy? It's a fascinating question and one we'll be watching very closely. That's all for this explainer. Thanks for joining us.